We've got Mr. S.L. Narayanan joining in right now, Group CFO at the Sun Group. Sir, thanks very much for your time. We've been trying to dial you in for a while now. Appreciate you taking our phone call. What's happening, sir, what will happen now with the Jet-Etihad deal finally a reality? How do you look at it, and what do you think it will do to the aviation business?
I think it's a very, very positive development because this is the first transaction that's got consummated after the liberalization of rules last year. So there's been a lot of interest from time to time with respect to several players, I know. And this first transaction certainly is a positive development.
You know, we had lots of spokespeople from the industry, ex-regulators, etc., essentially pointing out that the deal basically hinged on the bilateral agreements and the benefits that Jet has been able to secure from the government. Otherwise, this deal wouldn't have gone through. How do you react to that? Those comments?
I am not competent to comment on that. I don't think any deal would have got completely predicated on just bilaterals. But I don't think I should comment on this. I think it is very, very well understood that India will be one of the fastest growing markets for commercial aviation for the next several years. And in that sense, some of these very well-established global carriers in the region ought to be looking at India with a lot of interest. And the consummation of this deal, I think, is going to create renewed interest. In that sense, I think we are very, very happy that this deal has happened.
Okay. No, absolutely. But you're being very charitable, Mr. Narayanan.
In what way?
This deal, obviously, it shows that there is a lot of global interest in the Indian aviation space. But about the bilaterals and about how, this would or wouldn't have happened if some of those things wouldn't have gone through.
Why should anybody pay such a high premium? And, it's not for me to comment on this, but normally in any industry, you will find that the kind of discounting rate that will be applied by a strategic investor would be a lot lower than what a typical private equity firm or a financial investor would apply. Because typically return and a higher rate of return because they're working with extremely high hurdle rates which they have to promise to their limited partners. On the other hand, a strategic investor like an airline investing in another airline oftentimes work with discounting rates that are far lower, which in turn makes the pricing also that much more liberal. Because at the end of the day, there is always that extra that needs to be given to close the deal.
Yeah. So, how do other carriers get impacted? Does this increase competition?
I think we are in a very, very competitive environment already. In fact, we were in a hyper-competitive environment about 15 months ago. And after that, I think slowly but steadily we have seen a lot of discipline coming into pricing. In fact, people, including ourselves, have vacated unprofitable routes. Some of the other carriers have discontinued routes that were started just about 6-7 months ago. And we've also been equally disciplined unless we get a certain minimum rate of return in terms of route profitability. We are not putting any capacity in loss-making sectors. And in fact, we have diverted a lot of capacity into the non-metro destinations, which are underserved, and where the pricing possibilities are a lot better. So I don't think this industry is in any stage to get into one more round of irrational pricing and, hurting every player in the process. I don't think so.
Mr. Narayanan, thanks very much for your time, sir.